All right, how do you do, everybody? The markets are positive again today. Go figure, up 1% in the E-minis, and it is strong, baby. Look at our AD, it's 370. We are above the opening 15-minute range. We're above the hourly mid. We're above the VWAP. We're above all these pivot points. We're above the overnight high. Bull, 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 bull. And let's not forget how I called this. Y'all remember? Y'all remember how I said, where's my thing at? Where's my thing at? Y'all remember how Bobby called the bull market? Remember when I said, oh man, get ready. It's going to be a raging bull market. That is not the case, y'all. This is where I called the bear market right here. I said, we're the bear, y'all. The bear starts here. And of course, the market's done nothing but rip to the upside. It is trying to make its decision on whether we want to be above the 200 simple daily moving average or below it. And that decision will be followed out in the days to come. Of course, we have a lot of downside risk in the market, don't we? We really do at this time. What are our downside risks? Well, our downside risk are, what if Putin, tosses a nuke? What if he does this? What if he does all kinds of stuff? You box a dictator into a corner, they do all kind of crazy stuff, and the world would react. Keep in mind, news is noise, and it's all temporary. We just got to trade what's in front of us. So the market's very bullish today. Let's go to our other little chart, our big green monster. And where's my big green monster? There we go. Big green monster is probably still in the fairly priced value zone, right? So everything's so slow today. All right, here we go. We're fairly priced. And as you'll notice, we have moved now, which makes me more comfortable too. We have moved our point of control on volume profile from down here to now volume is most comfortable here in the fair value zone. So now the likelihood that we would come back down here is diminished. We are fairly priced, and we'll see how we go. Probably going up to this 4,600 level. I would think we'll at least check out the 4,600 level. All right, the skew driver is, I've already put it in today. Had to restart my machine to get it to work. It is 77 right now. So the skew is coming on down, which we would anticipate because we would assume that we're going to normalize at some point in time, though we have been above normal for quite some time, going back all the way to September, right? All kinds of increased volatility. Let's look at the VIX. We always say we never look at the VIX enough. See what our friend the VIX is doing today. VIXy, VIXy. Down 1.04, so we're at 22.53. I can remember Karen is just clear as day in her little interview with the saws and offs that, oh, if I could pick volatility, what would it be? 20. I just like 20 volatility. I can hear Karen say it now. Well, Karen, you're getting your volatility, girl. We're at 22.5. All righty then. So I'm still working on the spreadsheet, y'all, to make sure that we have all the stuff covered that we need to cover. I probably just need to give y'all the big one with everything that takes so long to load, and then just let y'all, use what you want to use out of it. But I'm trying to make it more relevant to what we're actually trading today. So for those of you that were not with us in 2021, the start of 2021, this is kind of what we would do every day. We'd go in, you'd update your net lick every day, kind of see how you were doing. And it was important because we would follow the Greeks and our buying power, and everything was kind of based on, our Greeks and our buying power. So in this account, my account value is, not all accounts. Now that I got 3 or 4 accounts in here, it's just giving, which one is it, Bob? Okay, so we are at 101. 542.75 today. All right. So then you got to go into your Greeks, and then the purpose of this was, this is something you had to do every day, right? To keep in touch with, hey, are my Greeks in line? So let's see what our Greekies are. Greeky. Monitor tab. Make sure I'm on that account. Yes, and I am. So our Greeks are delta SPY weighted is negative 0.87. 0.87. And our theta is 20.47. Vega, which is not a Greek, but we pretend that it is 83.24. And then the other thing that I do is I go over to my buying power, and you know, how much buying power are we using? And that's $100,000 account. And we're using 23,853. 23,853. I think that's all we put in. So you put in the stuff and you go, my theta is not high enough. I need higher theta. But the reason it's not higher enough is because we've got that big long way out in time put, 5 puts, long puts in the SPX. So we could get that a little higher. We're using 23% of our buying power. Now, when I do share this spreadsheet with you, I've got all of the things here, the rules that I use regarding buying power. So with a VIX between 20 and 30, we want to use no more than 35% of our buying power. Okay. So it all depends on VIX. If you got a VIX of 40 plus, you can go up to 50%. And do I always do this or follow those rules? No, sometimes I'll go over. I really will. And then we'll go over here, and we got a couple of things that tell us, hey, you don't need to adjust your deltas. Now, the reason, here's the one I go by on thing, and it was based on Option Alpha recommends blah, 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 blah. Tasty Trade recommends a delta of blah, blah, blah. Since we have this, I chose this. So as long as your Vega is positive, which it is in my account, it's going to say no adjustment. So even though we're slightly delta short deltas, no adjustment is necessary. So this is kind of cool. So this is the one I look at. These are other ones that you can look at. I don't put too much stock in them. You can even hide them if you want to, but this is the one I really look at. Do I need to adjust my Greeks? And so it says, no, Bob, you good, baby. So the only thing that I see that's a problem is my theta's a little low, but we'll take care of that if we ever get a big down day, hopefully. And I probably should have bought, I should have sold my puts yesterday in the SPX, and I did. So, you know, hindsight is 50-50, as former Auburn coach, God rest his soul, Pat Dye would have said. All right, so with that in mind, let's see what I did yesterday, though. And I think you'll like this. So yesterday, I said, you know what? I've got those long puts, right? I've got the long puts. So why would I not do a Rick trade? So let's look at why I did a Rick trade. Let's just look at our SPX positions in this account. All right. So remember, I've got that long 5 puts. Let's see what we got here. We've got a long 5 puts, and then I did a Rick trade. Now, if you want to do a fearless Rick trade, which is a Rick trade with 0 probability of losing, then buy you some puts farther out in time and sell Rick trades against them every Monday, Wednesday, Friday with no fear. Now, let's see if I can explain this. Slow down, Bobby. If I could only find my Adderall, I swear it's in my car somewhere. I just can't find it. Someone probably broke in and stole all my Adderall, and it's now being dispersed on some corner in Carrollton, Georgia, in a dark alley. But let's see if I can do this. So I'm doing single symbol, right? So I've got a Rick trade on. Let's see what the Rick trade looks like. That is a put debit spread, right? You make money if it goes up. You lose, you know, close to $2,000 if the market goes down. But what happens when you have, let's take the Rick trade off, and let's just show you the 5 longs. So if I've got 5 long puts, then if we got a 20-day crash in a day and volatility exploded, and I'm going to move that 10% up for my current calculations, then we're going to be up 91,000. Everyone see that? But what happens if I have a Rick trade on? Well, if I have a Rick trade on, I'm not going to be up 91,000. I'm going to be up 89,550. So you see how the Rick trade in and of itself is pretty much riskless to me. Riskless. Do I care if the market crashes when I have a Rick trade on? Well, no, crap, no, not if I've got 5 puts down here. All right, so how much did the puts cost me? Well, they cost me, let's do the math. They cost me $680. Okay. So $680 times 5 cost me $3,400, right? $3,400. How much protection do I have? Well, when I did these, I have 100 days of having these long puts that can protect my Rick trades. Okay, so 98 days, all right? So if you said, well, let's say 100 days divided by 7, right? So that gives me 14 weeks. So I got 14 weeks that I can do Rick trades times 3. All right, so I can do 42 Rick trades with these longs kind of protecting, right? So if I pull in, you know, $100, and I'd have to go a little closer to the money, but I'm not scared to, because why? I have these 5 longs down there protecting me. So if I go 42 times, let's say 42 times $100, then I'm bringing in 4,200 when I spent 3,400 for the insurance. Now, is that necessarily a great thing? No, but cool thing is your Rick trade is fully protected. And if we get a crash, then we get lottery type returns while paying for our insurance by using the Rick trade. Everybody with me? So I could actually, you know, move up my Rick trade to, you know, Rick's bringing in 25, 30, 35 cents, 40 cents. You know, I could bring it in to collect $1 or maybe $2 and still be totally fine and protected to the downside, still wanting a crash to the downside while I'm paying for that insurance. Isn't that cool? Now, we've never done this before. Right? We've never done this particular thing before. That's just something for you to think about. And would I like to fill my 3 to pay for my 5? Yeah, but if I don't, I'll just pay for my insurance that I have on now by doing Rick trades. And if these, you know, we get a big down day and it blows past my Rick trade, I'm happy because I got 5 loans behind me supporting. Now all you gotta do is go to the Analyze tab, set it up. What does it look like? And see here, you can say, let's see, hide simulations, all single symbol. So this is all my positions. Even without volatility adjusted, it says, look, even with the Rick trade on, with no volatility adjustment, if you get a 20% down move, I'm going to make $13,700. Ta-da! Bobby goes to sleep and Bobby doesn't care about the crash. Bobby doesn't care about what the market does. You know, if that goes down, look at there, if it goes down 30%, what do I care? Because now I'm up 43,000. But what if we have a Corona crash? We have a Corona crash of 35%. I'm up 62,000. Cool, huh? So all I got to do now is do my Rick trade to pay for my insurance, unless we get a huge down move. At which point, then I could sell the 3 puts to finance my 5. Key questions. No, I don't want Mozilla coming up. Unbelievable. All right. So where are we at now? So let's look at our little chart. You see how we had strength gets around that 200-day moving average, and people are fighting, right? This is a fight for the bull and the bear. So, but our assumption, though, is that, you know, we're probably still going to go down. We'll just see how this little linear regression works, but it's really, it helps us to frame it. It helps us to frame what the market's going to do. All right, so let's do what we're going to do today. So let's see. Our Greeks said that we don't need to do anything other than my theta is not where it needs to be. Where should theta be? Your theta ideally should be between 0.1% of your portfolio net liquidation value and 1% of your portfolio net lig. So I'm low, right? So it doesn't give me this nice, pretty green color. The spreadsheet gives me this putrid little Malanta. For those of y'all that's mama and papa's used to take that stuff. And you'd be like, mama and papa, why y'all take that? And, you know, they just buzz off kid. It was nasty tasting stuff. Kind of like Pepto-Bismol. All right. So I don't have to do anything on anything other than maybe do me a little RIT trade. Right? Do me a little RIT trade. Now, RIT trade in this one, and I could do it in the E-minis. Let's see. But I think that took up a lot of buying power last time I did it. And I did not know this, y'all. Did y'all catch this? I did a 224. So I did 2 contracts of this thing. And so instead of a 112, I made it a 224. And this puppy is taking $20,000 buying power, which is $10,000 each. So I'm not sure, even though I'm what, at 20% of my buying power, I don't want to go full blown and add another 10,000. So I'll probably still do some micro trades in here. So let's go build this one. All righty. So here's the other account over here. So let's build us a 111. We'll do this in the macros. And I like going out closest to 60 without going over. We'll do a long put vertical, do them 50 wide. Y'all should be able to know this by now. You know how we put them on. 44.80, 44.30. So that's going for 16.50. Let's move that puppy down to the point that we can do that for $10. And that little thing will get stuck. Dang it! And that's $11, $10.50, and it's gonna get stuck. So there's $10. Go down one more, and we're at $9.75. So pop that up to 10, and shwang. Ta-da! I said ta-da! Place order. Why aren't you filling me? They're kind of wide markers. Look at this. Now 775, 1225. Now we're filling. All right, so then we got to go out and pay for that. So we need to collect $20. Now, it's a big update, right? So I'm thinking we might get a decent sized move down. So instead of doing a 10 delta, I am much more happy going out past this 2 standard deviations, collecting a little more premium and paying for it maybe with a 5 or 6 probability of being in the money. So let's sell this one, the 12, we'll do 2 of them to pay for our put debit spread. Shwank. Ta-da. There we go. Beautiful. All right, then we're going to move this over to the side, and I'm going to go put it in this other account. So we'll go trade, macros, 57, and where were those strikes? We got filled on the 42.80, 42.30, 42.80, 42.30. 42.80, 43.30. Come on, baby. Come on, little baby. And then we'll show you how to put it into the spreadsheet. 42.80. So we'll buy that one. We're going to sell the 42.30. And then we're going to go collect us about $12 or so times 2 to pay for that. Way out of the money. So we don't want to do that. So we're going to keep on going down. Go down, Bob. Go down, oh Bob, oh Bob. There we go. So, oh, so that didn't look right. Make sure you turn that to 2, right? So see if we can get filled for something or another here. It's moving around all over the place. Probably gonna have to do something different. Then again, this is in an IRA account. This one is an IRA, just a regular old IRA. So make sure that you contact your broker and say, or fill out the application for futures, and then make sure that after they approve that, that they also approve you for futures options, right? Because the cool thing is, see how that's not like a cash secured thing, like you were doing trading SPY or something, you know, it's just much better. We get to span margin. And we know the dangers of span margin. Somebody's out there going, yeah, you dumb bud, you don't know nothing about span margin. Yes, I do. Don't tell me I don't. Let's get a feel, baby. Yeah, we're a feel. All right. So let's do this. Let's put it in its little category. So that's a 112. So we got all these things, right? We got our BSH, we got our 112 first, we got our 112 in the E-minis. So then we got here. So we got 112 second. 112 second. Left group, back group. 2 second. All right. All right, so then let's go put it in. Y'all help me remember the strikes: 4280, 4230, 3600. So we go to our micros tab. And is. Did one tranche, 112. And what's the name? So this helps us here. Name it exactly the same thing over here, right? 112 second. So that, you know, if you're going to close it, it's easier to find once you close it over here. Just easier to find. And we said it was the 4280, 4230, and what's it, the 3600. I'll put those strikes in there like that. Let's make sure it was 3600. Oh, yes, indeed. Let's go back. Calls or puts. We did it on the put side. And what was my strategy? The 112. How many days to expiration? Expiration was what, 58? 57. 57 days. Did I not do one in here yesterday? I guess I did. So 57 days. So we entered it in the year of our Lord 3/24/22. So here we go. What was our price? Now I think I've got this thing fixed to where it'll do it automatically for us. This thing here. So we did it for field order 1550. Create duplicate order. See how much we got. It was 6762. Let's see if my spreadsheet's working. Please work, please. 50 should be 6762. Crap. Is that not right? Hold on. 112, 57, 2, 57, 1550. Let me go back. Darn it. 77.50 minus 9 minus $8. 511. Oh, crap, I got work to do. Hold on. We did get filled for 15. Or what did we get filled for? Let's make sure we got filled at 1550. So it's 1550, doesn't it? Let's see. Order 1550. From seeing 6762. All right. Well, in the worst case scenarios, if it doesn't fix it for you, then you got to do. Oh, I bet I know why. I bet I didn't copy my formula down. Copy my formula. Dang it, they didn't do it either. And I got to work on my thing. If it's 112, if it's this, if it's this, if it's this, unbelievable, unbelievable. If it's a jade lizard, I need to take that out. So why did I get this one right? This one worked right. Let's see, 112 is 1, 2, 3, 4 legs. I have to look at it, y'all. I have to look at it. Something ain't right. Let me take a screenshot of that so that I can come back and work on that maybe later tonight. maybe not. Y'all know how I am. I got ball games tonight. Our ball practice of our kids. Unbelievable. When you got 3 different ones playing, that's all my life is now. It's ball practice, ball practice, ball practice. And I'm not, I'm not upset. I enjoy it. I like being out there with my kids. I don't think that I don't. Move that over the side. We'll work on that. But the cool thing that we want to know that is because let's go back to this now. When we sell premium, right? Our little thing here should tell us that, hey, Bob, you are selling premium this week. I've sold a total of $1,751. I have a goal of selling $2,361. Now, why would you have a goal of selling $2,361? Because in my opinion, if I'm going to get I want that 50% return. Let's go for it, baby. Let's swing for the fence. Maybe only 14. So I want to try to sell premium of 39.36. Where'd you get that 39.36, Bob? Well, I took my net lit. I say I want a 50% return. So that means a profit of this. In order to get a profit of that, I need to sell, and I expect to keep 25% of my theta that I create, or of the premium sold. I want, Tasty Trade tells us on average, you're going to keep 25% of what you sell. So if you sell $1 in premium, you expect to keep a quarter. So that means in a 52-week period, I need to sell 203. There's my number, Boy Scout troop, best darn troop you'll ever be. $203,000 worth of premium, which means every month, which is this divided by 12, I need to sell $16,000 in premium. And weekly, which is this divided by 4.3, because that's how many weeks are in a month on average, I need to sell 3936. And then if you'll say that divided by 5 trading days, that means I should sell premium of $787 a week. Everybody with me? That cool? Now, I'm working on the credit spreads here. Here's where I'm putting the RIC trades, and this is not completed yet either. I got to do some more math in here, but I want the premium that I get from selling the RIC trade to also be calculated into that number, right? So you see I got a credit of $102. That credit of $102 should be included in my calculations. Now, if I want to make this easy and give y'all the spreadsheet and y'all don't want it to do all the calculations, you could just manually put in your credit, right? Like on the micros here, 7162. You could just type in 6762 and be done with it. All right, so let's look now at that account. We got our little trade in, all is well. What else? Let's show you this one too. Remember I didn't totally abandon our little AIM and our hedge fundy excellent adventure. This account has the hedge fundy excellent adventure in it, right? It's a small Roth IRA that I have that currently has the bonds and the UPRO empire in it. So we're still running that on a small amount of capital for us to show and to do the quarterly adjustment and to maybe allow AIM to make some of those decisions as well. So we still got that running there. Then we've got the other account, let's see here, where we've got a bunch of 112s. Let's look at our overall Greeks in this one. See if there's something we need to do. We're negative delta. We're positive theta. We're negative theta, which you would expect to be. Now, let's see if there's anything that we want to close out. So we've got a bunch of 112s, 11 this is 11 that. Let's see how many stuff we got here. Allocated. What we got unallocated, Bob? So, so I put one in yesterday, right? So this is a 112. So we got a 1126. Third. Looks like this one's going to be there's a 7th. Looks like this is going to be 1128. Let's put This would be the 1128. 1128. 8. H. Yeah. All right. So let me show you the expiration dates that we've got. And here's why we love the 111 trade, right? Look at this. $4,476 profit year to date on the 111. That's why you've seen us doing a lot more focusing on the 111. Go with the thing that is really, really, really working. So, see, we got some in 36 days. And remember, it's kind of one of these things in this account, we've got so many on now that you can start taking off your most profitable. And we know the call one's nothing but losing money. 1124 is up 72%. And I just kind of go through and just look at them, right? This one's up 29%. This one's up 92%. So y'all remember that one, 92%. 11166, unbelievable, is up 95%. Wow. So that's the winner so far, right? 11167, 95.45. Let's see if it's even a better winner. So we got the 1128 up 15%, 11168 up 86%, 1123 is up 73%. Here's a call that's up. Wow, one of my calls is actually up, even though we lost 1625 today. Okay. 112 59% profit. I mean, can you ever find one of these that's not profitable? Well, here's one. The one that I did, called it the 112 bear, which was a short naked call and a long put debit spread. Right? Sure, what I'm talking about. 1126 up 53%, and the 111 diagonal, the one that Matt and Ken were talking about, it's doing great. We're up $262 on that. I couldn't be more proud. So the one, if I wanted to take one off today, is I can take one off that's 95%. Why would you not? So let's see if we can close that one. Let's see that. Trying to see if it would. Control key, right click, create closing order. Oh man. Can we not create a single order to close all three of those? Like I put one on. Closing order. Sell one vertical. That's not right. 2145. Let me do it in waves, aren't they? Right, so I guess we could close the put debit spread first, which would be the 4080, 4030. Create closing order, sell the vertical for. Now again, I don't have to do that. I could close. Let's make sure we look at it. I could close this all by itself. I could close the short put all by its little lonesome and leave on my put debit spread because the insurance is already paid for. So you got to figure out, are you using this one as a hedge, or are you using this as an income trade? So if you're using it as a hedge, you could close this once it gets to 50% profit, and you've got on a free put debit spread that acts totally as a hedge. So to me, though, I think I want to just take all of it off, take my 100% profit, 95%, 96% profit. So let's do this one, this. Okay, closing order. So remember, we bought it for around 10, and we get to sell it for 425. That ain't bad. Get out of that. Cancel replace. Take it down to 425. Come on, Placido, give me a. $4 credit. And we're out for $4. All right. So we got $4 credit on that. So now let's we gotta close this part of it. Create closing order. Buy that back. Remember, we sold this for like 20. So now we're going to buy it back for, let's try 550. Let's try 5/4 and bump our way up. Ah, there we go. Pays to be greedy, baby. Pays to be greedy. All right. So if we got a $4 credit and a $5.25 debit, that should be a 125. Well, I don't think this is in my thing though. Let's see. This was the 11167, and I don't think I started recording those. And oh, it's another account. Let's see. Oh no, got so many different spreadsheets now. IRA. 23710. I think this is it. Hopefully y'all be better organized than me. All right, here we go. Let's go to macros. I don't have the 11167th in there, so that's fine. So I don't have to record that. All right. And then what would I do? I've taken that off. So now the plan would be to put the one that I've already got in the other accounts in this one as well. So we could do the 4280, 4230 in this one. Let's do it in this account. Out 57. And we sold, let's see, 4280, 4230. Isn't this 111 trade fun though, y'all? I mean, it's just been a great trade in a very turbulent market. That's the key. This thing is making money in the big sell off and then the rush up. So I'm really comfortable with this trade. I like it a lot. I'm going to allocate more to it. I'm going to go out and sell the 3600. Come here, little baby. Where you at? 3600. Now it's 1225. All right. Give me two of them. 1650. So we'll probably put that down to what, 16.25, so we can get filled. Chum on, little baby. Chum on. Come on, little Gertrude. Get in there. There we go. There we go. And then I'll show you recording this one up. So we'll go. Let's see. Hey. 67th is gone. It will be tomorrow. It's showing that now. So we'll call this the 112 4th, 112 7th, 112 8th. This should be the 112 9th. 9th. Right click. Oh, crap. Here we go. Right click. Move the group. 1129. And then the cool thing is you go put it on your spreadsheet. 1129. So which one is it? Yeah, here we go. So go put it in 1129. We did one tranche. 1129. And it was the 4280. 4230, 3600. And you don't have to put the strikes here if you don't want to. I mean, that takes a little extra time. I just like being able to go back at the end of the year or end of the period and look at, see where all my strikes were, So we did this on the put side. That did what strategy? We did the 1-1-2. And I think it was 57 days to expiration. Here on order 3, 24, 22. Days in trade is 0. And we did that for open. We did it for 16. Did it for 16, which gave us a credit of 74.12. Let's see if that was right or wrong. Order 16. 74.12. Now, how is that one right? And that other one's not right on the other spreadsheet. 74.12. It figured it out exactly correct. 74.12. Yeah. And so that should have been brought up over here, right? And said, hey, you still got $777 of premium to sell today, Buster. But that is one step closer to getting there. And I'm thinking that I didn't include that one that I put on yesterday. Surely I put in one yesterday. I got to check my spreadsheets. I've been trying to get my spreadsheets all updated. And once I do that, I'll share that with you. Unless you want the one as is, I'm just going to have to come back and make some changes on. I want you to have the complete up-to-date best product that we got. All right, questions at all? Wasn't this fun? The 1-1-1 trade, y'all, has been excellent. How do I know it's excellent? Because it's outperformed anything that we're doing. How do I know? Because I can show you right here. Right here is all I need to know. $4,440 year to date. That is nothing but the 1-1-1. All right, good session today. Hope you have a good one. I will see y'all tomorrow at 2 p.m. Eastern.